Yo, what's happening?
What's going on, man? Whew,
Woo!
what is going on? It's been a crazy day in the market, man.
Up and
Whew,
down, all over the place, right? Well, you get that big
right.
move yesterday, and then you're going to get some consolidation and some stuff like that. So, not super
What do
shocking,
we
but
have? About 80 points of range today?
got plenty of range, so there's plenty tradable setups. Overall, pretty good day for me. I had a couple misses, of course. In a day like this, you're going to have some stuff like that, but overall, finished green. That's all you can ask, right?
Oh yeah. I finished green. Like I was telling you, I was just kind of looking, and I definitely took a trade that I should have waited for. I jumped in because of fear of missing out, and a trade that was 3-1 became 1-1. Um, and I don't like 1-1s because that was a lot of range that if it would have went against me that I would have gave up. Um, I happened to win the trade, actually a nice size winner, but I have to also be cognizant of that wasn't the trade that I should have taken, because I don't want to get used to doing that. Right? You start to get relaxed and taking trades that you like. Let me jump in. Now it becomes a gamble because I'm not sticking to my rules. I'm not sticking to my game plan. And so I
Yep.
kind of had a slap on the wrist there moment, like, yeah, you got away with one, buddy. But if that would have went away, from you, you would have ate a lot into, you know, your wins of the day. And so that would have hurt. I would have been climbing. I mean, I still
Sure.
would have been green, but it's one thing to follow your rules and be green, but lose like a couple grand because you didn't follow your rules, So I had to kind of
Yeah,
slap
those are
myself.
those are
FOMO,
definitely the
man.
ones
I
that
hate FOMO.
sting the worst. When you don't follow your rules and you end up losing, those are the ones that really hurt. So
I try to even so for me, that was one of my turning points was even if I won, I still have to note that I didn't follow my rules.
sure.
And I failed myself for the day because I didn't follow my rules. You're gonna get away with some of those from time to time. I think we've all done it, but to recognize it so that you don't do it again, because eventually it's gonna catch up to you if you continue to do it. And then if you're failing in your trade plan, how can you back test what your issue is if you're not sticking to your rules? So we got to
Absolutely.
make sure that
Yep.
we definitely
Yep.
stick to our rules. FOMO is real. At some point, we'll definitely dig deep into the psychological, side of FOMO
Oh
because I
yeah.
think we need
Oh
that.
yeah. Well, yeah, definitely, definitely. There's all kinds of mind games that get played on you in the market. So we'll certainly touch on that at some point. That's a little bit more advanced than where we're at right now at
Yeah,
this stage. So
right.
let's go ahead. I did prepare a little something today. So let
All
me
right.
bring up my screen. All right. So we're going to call this one "What Can You Trade and More." So we're going to talk about various tradable products that are out there. We're going to talk a little bit about what the indexes are exactly, and then I'm going to do a deep dive into the S&P 500 and kind of give folks an idea how it's created, where the number comes from, what is it exactly. So that's kind of the preview of what we're going to do. So let's dive in. All right. So first thing, let's talk about some tradable products. So you have your basic one that I'm sure everybody that's watching this knows, stocks. So those are your shares of your companies, like your Apples, your Teslas, your Amazons. You buy and sell them on exchanges like the New York Stock Exchange or Nasdaq. It's straightforward. You just own a piece of that company, and if the company's profitable, in theory, the price should go up. Um, Pretty basic one there. Second thing that you can trade is something called bonds, which are essentially loans that you give the governments or companies. They pay you interest over time. You get your principal back then at maturity. They're less volatile than stocks, so some people with huge account sizes do prefer these. Like a lot of like the retirement investment firms, pension plans, they'll trade a lot of bonds. But for our purposes, we're probably not going to do a lot of that. Once in a while, I will trade treasury bond futures, but we'll get to that here in a little bit. Um, Third one is Forex, which are currencies like the US dollar, the euro, the yen. It's a massive 24/7 market. It's driven by economic events, speculation, high leverage, high risk. But it is very good to trade. You get a lot of good movement in there. Some people love it. Traded a little bit, not too much. I kind of found my niche in futures, but I have dabbled a little bit in there. Next one we have is commodities. So these would be your physical things like your gold, your oil, your wheat, your coffee. You can trade these through the futures contracts or ETFs, which we're going to talk about in just a second. The prices are supposed to swing with the supply and the demand, and a lot of geopolitical stuff also works into the commodities, especially on the oil side. You get something that happens in the Middle East, and you'll see big moves in oil that happen, in response to that. Next one, which might be of some interest to folks on here, cryptocurrencies. Those are digital assets like your Bitcoin, your Ethereum. There's like thousands of those. Well, I'll call them shit coins because that's really what they are. They're decentralized. They're super volatile. That can be good and bad for trading. You can trade those things on exchanges like Binance or Coinbase. Next one, we have options. So what these are contracts that give you the right, but not the obligation, to buy or sell something like stocks or commodities at a set later price. Futures. So the best way to bet on those is you have less cash up front, but you add additional factors that you got to be correct on. So those are your options there. So your futures, those are agreements to buy or sell something at a later date at a set price. Popular with pros, this is what Adrian and I both trade. Highly leveraged, easy to get in and out of. You can go long, you can go short. That's what I love about futures, to be honest with you. That's my favorite thing. You don't have to have stock float with your broker to be able to go short, which is a huge advantage in my eyes. So I alluded this one a little bit earlier, the ETFs, and those are called exchange-traded funds. And what those are baskets of assets like stocks, bonds, commodities, and you trade them like a stock. They basically just put them all together. It's great for easy diversification. You don't have to pick the individual winners then. If you like a certain sector, say you like technology, you can trade the technology ETF. If you like industrials, you can trade the industrials ETF. There's a number of them out there. Very good to trade. I wouldn't say very safe, but they're safer than picking any kind of individual name out there. Next one we have is the CFDs, or contracts for difference. These are kind of odd ones. You basically bet on the price changes of an asset. They're common in Forex. Some stocks, they do it in crypto a little bit. They're highly leveraged. They're not available everywhere, and you actually can't even trade them in the U.S., but I did just want to mention them in case anybody sees anything like that. And the final one that I have on here is the REITs, or the Real Estate Investment Trust. They're tradable shares and properties. Think of it like stock exposure to real estate without actually having to buy the house. Essentially what it is. You can get that exposure to, like, say you like commercial real estate, and you want to get some kind of exposure into that market, into that sector. REITs are an easy way to do that. Any questions on that one, Adrian?
No, I think that was a good breakdown of them for sure.
Cool. Let's move on then. So I just want to quickly talk about our primary trading products, and those are futures. Adrian and I both trade the minis for the S&P 500. Adrian trades the NASDAQ. I don't really trade it as much, but we also trade gold and oil as well. I also want to talk a little bit about what standard futures are versus minis versus micros. So standards, those are the original futures. They came out in the 80s. For an example, on the S&P 500, each point that the S&P 500 moves, that equates to about $250. When you go to the minis, they're a little bit smaller version of that. So for each point that the S&P 500 would move, it costs about $50. And then the micros are a much, much smaller version of all those. And they're about 1/10 of the size. So for each point that it moves, you get about $5 per point. So that's kind of how they work out. We typically trade the minis unless volatility is like insane, like during like the COVID time. We were getting like 140 point days like on the regular at that point. So I would slip into those micros at that time. Just so I could give myself that wide enough stop on my position. and still have multiple contracts so I can scale in and out, which is something that we'll definitely talk about here in the future when we start going through some strategies of what scaling is and why we want those multiple contracts. Micros, though, they are great for beginners, especially if you have the smaller account size. We talked a little bit yesterday about, maybe doing some paper trading or starting small. And if you're starting small, micros might be your avenue to kind of get in there. I highly recommend it for the new traders. I think it's a great way to allow yourself to feel those emotions while not risking a shit ton of money. So, I think they're a good product. They came out, I think it was like 2019. It was right before COVID they came out. So they haven't been around a very long time. There's plenty of liquidity in there. So definitely tradable, highly suggested for the new ones. So
yeah, definitely suggest people start off, if you have not traded, start off with the micros for sure.
Absolutely.
You can start off with a lot less capital, right?
For sure.
Yep. And you can chime in on this one. I think that if you're doing micros only, I really think, after you've paper traded and you're like, okay, I'm good to go, a couple thousand is all you really need to get started. You don't need a heck of a lot, because losing, unless you're just reckless, losing there is like $50,
Yes.
It's like,
yeah. And even on a day like today where we have these 80-point ranges, you can make some good money with those.
Right.
Even if with small, you could have like 5 contracts basically, and make a few $100s per trade, which is a great day.
Yeah, great day.
So there's nothing wrong with that. You got to start somewhere, start small, be safe. Don't overextend yourself right away. You can always move up. Once you get that account size a little bit bigger, but be smart with it. So, all right. So let's talk a little bit about what the indexes are. So an index is a weighted average of the selected basket of assets. So some popular examples of that would be like the S&P 500, which we keep mentioning over and over and over again, since that's our primary thing that we trade. The S&P tracks 500 of the biggest U.S. companies, and I'll go into a deep dive into that here in the next slide. So I'll kind of leave the rest for that. Another popular example would be your Dow Jones Industrial. This is the one that the news loves to show. It's kind of old school. It's 30 of the biggest companies in America. Your 30 biggest firms are in there. It used to be primarily just industrials, but now our bigger companies are mostly tech companies. So of course those are weighted into there as well. Next one we have here is the NASDAQ 100. So what the NASDAQ 100 does is it tracks 100 tech-focused companies like Microsoft, NVIDIA, which is about to report earnings here in a few minutes.
Yep.
That could get us some moves. We'll come to that later. You can almost think of the NASDAQ as a tech ETF, because that's essentially what it is. It's nothing but tech stocks. 100 of your biggest tech companies. That's what the NASDAQ is. But next one on there is the FTSE 100. So that's your top 100 UK companies. Some folks like to trade that, and if you have like odd hours that you want to trade, the FTSE is actually a decent product that you can get into, and there's some futures contracts on that as well. You also have the Nikkei. So that's your Japanese market. So if you're trading from like 9 p.m. to midnight, maybe you want to look at the Nikkei. Just a suggestion there. So how do they work? You can't buy the index directly. It's not like a single thing like a stock. Instead it's a calculated number. It's based on the prices of the various components of it. They're all weighted. So each stock has a different amount that it affects. Usually the larger companies count more, I guess, towards the number. To trade them then, you can trade them indirectly through futures contracts, which is what we do, or you can trade them through ETFs like the SPY. Some people will talk about, you hear a lot of talk about the SPY. That's the S&P 500 ETF. And then you can also trade them through options as well. So why trade them? They basically smooth out the ups and downs that the individual stocks give you. You could have a company, say Microsoft is popping 10%, but NVIDIA is down 15%. Instead of having those big gains or losses on the individual company, the two will kind of balance each other out. So it gives you that diversification, It's more protection from news-based type stuff. You know, so if you're going longer term and you don't want that overnight risk that I talked about, you know, yesterday, you know, that's a good option for you. They're less volatile basically than the single companies. So that's the big reason to trade them, in my opinion. Any comments on that at all?
Nope, we're good to go.
All right. I see Flipping Ticks is on here. Yes, the Nikkei can get a little bit dangerous. That is for sure.
How did you guys do? We did pretty. We both said we green. I went into my little story of how I broke a rule in my trading plan, but ultimately it didn't cost me.
Yep. Got lucky on that one.
Got lucky. Can't make that a habit for sure.
That's it. So let's do a little bit deeper dive in the S&P 500 since this is our primary product. Like I said earlier, you know, it includes 500 big names like Apple, Microsoft, Amazon, ExxonMobil. You know, they're chosen based on the size or their market capitalization, their liquidity, you know, how easy you can trade in and out of the stock, their industry representation. You know, not every company's tech. You know, it kind of gives you a wide variety of different industries. You know, there's finance, there's healthcare, energy. You know, it reflects on the broader economy, essentially. It's weighted. You know, the index isn't equal, you know, for each company's influence. You know, it depends on that market cap, how big it is. So giants like Apple, you know, with a market cap over like 3 trillion right now, they move the needle more than something like, I don't know, like an Etsy, you know, a little small, tiny company that's in there. So as of now, the top 5, and I watch these top 5 every day, because it can kind of give you an insight of what the market's going to do, is Apple, Microsoft, NVIDIA, Amazon, and Alphabet. And if you notice, those are all actually tech companies. And they actually make up 25% of the index. So if you're watching those 5, you know, and you see those 5 are going down, but the index hasn't moved yet, there's a good chance that the index is going to follow that. So it's a big tip, something that some people don't really know about, but heavily weighted. So watch those big 5 every time. So how do they select them? So there's a committee on the S&P Dow Jones Indices that actually pick these companies. And I think I alluded to this on our first podcast that, you know, if a company is doing crappy, they'll actually pluck it right out of the S&P 500 and they'll put a new one in there. So it's actually rigged to go up, essentially. You know, the firms, they have to be U.S. based, they have to be profitable, you know, and they have to meet those other criteria with, you know, their liquidity numbers and those types of things. So how do they move? You know, the price tracking, the S&P 500's value, it's calculated in real time during the trading hours from 9:30 to 4 p.m. You know, it's based on those stock prices, those 500 companies that's in there, adjusted for weight. You know, if Apple jumps 5%, the index will rise more than if a smaller firm like Kellogg's does. You know, so that's, like, once again, you know, the weighting is a big deal on there. So point versus percent. I did want to touch on this because you'll probably hear this lingo out there. So when you hear people say the S&P 500 fell 50 points, that's a raw change to it. It fell 50 numbers on there essentially. And then percentages, you know, would be the percent of the drop, you know, not the actual raw number that went into it. So some of the big influencers on the S&P 500, you know, any kind of big news event, that's going to be huge on there. Recently, probably over the last 2 years, the Fed rate interest decisions have probably been the biggest thing on it. You know, you could have your earnings heavyweights like NVIDIA that's coming up, that can swing it pretty hard. You know, it's broad, so it's a little bit less volatile than the individual stocks, but it's still going to react, you know, to the economy's pulse and what's going on, you know, throughout the world, really. I mean, since most of our companies are spread out throughout the world. So. All right, trading it. So I talked about this a little bit earlier. You know, it's not a single asset. You can't just say, hey, I'm buying the S&P 500. You know, you got to do that through, you know, your ETFs, your futures, and your options. So it's kind of the deep dive into the S&P 500, at least to give you an idea of some of like the terminology and the various things that go into it and how it's built and how you know, how it reacts to various things in the world. So any questions on that, Adrian?
No.
Okay.
We're hitting
Excellent. All right. Want to get in some charts?
Let's get into it. The fun part.
All right. Yeah. Teacher's over now. Give me 1 second here. All right. Let's start with our daily. We'll start from the top with the ES. Had some interesting moves that happened yesterday with the failed breakdown right here at the 59.36 level. Popped up, tried to recover a little bit, and now we're struggling some. Not exactly what you want to see for the failed breakdown. I like to kind of see some continuation the day after usually. I will, full disclosure, I did go long myself on my longer term assets. I got to stop just below this 59.24. So if we start to fall apart again, there's not a huge risk there. And I mean, we got big reward up to that. It's at least 3-4 to 1 just to get back to that other our old all-time high. And honestly, we got a triple top there. If it gets back up towards the top, it's probably going to break that. So risk reward wise, it was a decent trade. We'll see what happens. It's not doing exactly what I want it to, but most trades don't do exactly what you want them to. They mess around a little bit and play around. So, we'll see where it shakes out. But that's where we're at right now as far as the daily goes. Let's drill down a little so we can see the actual action. Low, and then we drove up, and we had a little peak here from yesterday or from Monday evening. I'm sorry. Broke it, tried again, and then we had a failed breakout on this level, and that's what actually caused this flush then down. And there was also Trump made a tweet about tariffs on the UK, and I think that's probably what sort of got the party started to the downside. You never know what kind of world events are going to come, but I'm pretty certain that's probably what triggered that. So it flushed down. We flushed through the overnight low here. Now we're coming back and we're retesting it from the bottom. So this is going to be a big area to see what happens here. So let's go ahead. And this is probably all going to change in like 8 minutes when the video comes out. But for now, we'll mark this. This could shoot anyway here in a little bit. But for now, we'll mark this level. This, 50, right around 59.80. So probably a good area to look for. On the downside, as far as day trading goes, this is probably a little area of interest here at this low, this 59.45. Again, depending what NVIDIA does, this could get taken out before the evening session begins, but we'll see. So for now, we'll put those two levels there. If this is just a normal day, that's where I would leave them at. Other little area of interest is where this failed breakout happened. I want to see it get back over high from here, which is 60.23. So we start creeping back up above that. Bulls are back in control. Probably time to get long. So what's your thoughts? You got any other levels that you're interested in on the ES?
So, yeah, I mean, one of the levels, I think, but I mean, even though it's been tested, I still want to see it hold, is the 6008. We've been having a lot of fun time in there. But it seems to either reject the hold. And, of course, I'm looking there. So, yeah, right in there. We've been kind of playing around for the 30 minutes.
Yeah, you can see on this 30, we had 1, 2, 3 bottoms that happened right in that area. So yeah, you could almost call that the breakout area from where we started the move for this afternoon. So yeah, that's definitely could be an area of interest for folks. If we can recover that, that's pretty bullish. But we could also see it come up, and that would be a good spot for maybe where it would reject. So let's go ahead and plop the line in there. So we'll say 6004 for me. Let's make it purple, since it would be a reclaim or a retest. So we'll see what happens. We'll mark that one on there, and we'll see. That's a good level, man. Good call on that. We'll see what happens there. Anything else on ES?
Yeah, looking for it to either hold or reject. So for me, if we hold that area, then chances are we will test that area that we failed from, which, we talked about. I was like, I'm looking for the 624 area. From there, if we can't break that, then I would get long, which, as you see, we struggled. We couldn't do it. And then it flushed from there to a nice, sweet little trade.
Yeah, 1, 2, almost 3. Yeah, 3 times. We were getting lower lows. I mean, the writing was on the wall. I mean, the whole time as you were watching it. If you're watching like the shorter time frames, you could see it was getting weaker and weaker. You were losing momentum essentially. And then you got that little tweet, and that's all it took. It was done. Down we went. So. They were just waiting for their excuse to sell it off.
And that's the beautiful thing too. You tell people, because I know a lot of people that reach out typically only go long. I'm a heavy long trader myself, but that doesn't stop me from going short. And when you're able to look at your levels and they either break or reject, it just kind of helps you read the market, right? Which, of course, we'll go through that. Once again, that's a little bit more advanced.
Absolutely.
But
that's how you set that narrative that we talk about. Yeah. Yep. You start telling yourself the story of what the product's doing. Then that's what you use the levels. I use them to trade, but that's what you can really use them for, is to tell you what's going on, what's happening with it.
Setting those levels.
That's it, man. That's it. So if we get above the 623, we got this little high here, and this is on our 120 minute as well. As you can see, so we're looking around 60.50, and then we're getting back up to, there's a little downtrend line that was happening, and so we'll probably get a little mess up in this area of 67. That'll probably be a tough one. If we get it, that's probably about where it'll stop tomorrow. Honestly, it'll start chopping around there, at least for a little bit, just because of those 2 lines converging at that same spot. All right, let's go ahead and have a glance at oil.
Your favorite.
Yeah, man.
It took me a while to get into oil.
I like it. It's been in that consolidation for a while, but you still get probably 1 or 2 good tradable levels per day. And today was no exception. We started to drop out. We'll zoom in a wee little bit. Let me hit these daily levels real fast. So, probably on the bull side on a daily, we'd want to see something over this 73.13. Honestly, since those 2 are so close, we'll go with 73.66. So probably if you want to get excited on a longer term trade, that'd be your spot right around there. As far as a bear level, we would look at the low from today, would probably be a decent area. But on the longer term, I mean, we're still in a consolidation. You could probably get a drift down to the 67 if we break, which is 136 ticks, which isn't bad. Definitely make some money off of that. So, good chance we keep the drift going. I mean, we're in a clear intermediate downtrend. If you look at this, let's widen her out a little bit. I mean, you can see we're coming down. Obviously, again, I think kind of like I said yesterday, where we came back up and we retested, we did exactly that. I think today we'll probably do the same. Tonight, I mean, we'll probably come up, retest around this 70 area, and then if we start to sell there, you could get an entry there, or you could wait for the entry to go below 68.37. Let's zoom in a little bit and get a better idea. So for me today, I had this level marked up to 68.69. We did get a penetration down that was a fake, and then second push through was where the money was made on that one. So down it went. Now we recovered it. So let's go ahead and zap this guy out. Put this low as tomorrow's area of interest, and then we'll see what happens tonight. Like I said, I think wouldn't be shocking to see us go over this 69.27 and then try to work up back to the 70 a little bit. We'll see what happens, though. Definitely wouldn't be.
We're kind of we're in an area and we're struggling.
Surprising since we're looking at a couple of days of the downtrend. You know, we're sort of due. I mean, look at our RSI. Yeah, absolutely.
Yeah.
And in the RSI, we have a divergence that's happening there too. So, you know, there's a little bit of pent up bull momentum there. So a little pop is probably likely, I think. Do you have any other levels on oil?
We got a lot of room. Well, I mean, I'm looking at that area for which the same area you got.
Yeah.
And, you know, because if we can pop that area, I mean, I'm looking up and sheesh, I mean, we could possibly go above, you know, the 70 mark. Because if we can break that, we got a lot of room. So I would be definitely looking at that down to the $70 mark. So that's a good little pop up that we could get. I'll be looking for that because we just consolidating right now. So either way, one or the other, it's either finna go down so we can touch some levels below, or we finally finna get a recorrection to the upside.
Yep. Yeah. You know, again, this is a consolidating market, so it's not quite as predictable as something that's trending. So you could get either way on it, but you know, there has been a lot of trading. You know, we've got tons of overlapping 120-minute candles there. So that's a lot of volume that's built up. That's a lot of people that can be wrong at these levels. So I say this every day. That's what we're looking for. Where people are wrong, that's where we want to get in. So, you know, when they're unwinding, we want to be just entering.
There you go.
Let's peek at. We'll peek at the 30. I don't think we're going to see anything new. Nope, definitely not. You know, this is just overlapping crap. So these are our keys, man. These are our key levels, definitely. No doubt about it. All right, let's go ahead. Let's do the gold.
The gold. I love
All
gold.
right. So we flushed a little yesterday. Yeah, me too.
Some sweet.
Flushed a little bit yesterday. Trying to recover now, it looks like. You know, we're back over that low that we lost. You know, so we're fighting. We got a lower or a higher low here, so that's a good sign for the bulls. Let's go. We'll drill in a little bit on our 120 peak. So we got some key levels. We're going to zap this one out. This is what I traded this one today.
Okay.
It was actually a really good trade, really easy trade. Honestly, that was probably my easiest trade of the day. One breakthrough, one test, down it went, and then we recovered after that. So I was already out by the time it started to recover. So you know, that's the key. You got to set your targets, stick to them, don't get greedy. You know, take your base hits, make your money, keep moving. You know, that's what I did here on this one. So areas of interest though today, you know, we have this overnight high. We're going to turn this into a green level. That breaks. You know, we got a double bottom here. You know, that kind of confirms it with the double bottom with the higher low. So, you know, the odds are really good. If we break this, we're going to start to move up. We got this next level there at 29.59. Not a super strong level there. That might look better in the 30-minute when we zoom in a little bit more. And then we're coming up to our all-time highs after that. So good chance.
It definitely might look a little bit better on the 30 because I actually have that as one of my levels that I'm looking forward to break.
You got that one?
Yep.
Let's check it out. It does. So that's, you know, this is where we kind of peaked. We had this little shelf here that we had the failed breakout on. And so that's the peak of that. So that's a good area to watch. You know, once again, sellers started here, right? So they started to sell, so they're shorts. So when we get back up there, they're right now, they're starting to take heat, you know. But if we get over this, they're in a losing trade then. You know, they're all in losing trades at that point.
Yeah.
So you know, this will be a good level to keep an eye on. Yep. So
yeah, definitely.
Downside, you know, we're looking at the 28.97. You know, if we break that, you know, sellers are back in control again. You know, we got another level. This is a pretty strong one. So be cautious. At this 28.86, you know, we have a double bottom there. You know, there's been a lot of interest there in the past. So odds are pretty good. We'll get at least a wee little tiny bounce there, maybe back up to retest our 97 area. That's probably the most likely thing that'll happen, and then we'll probably flush back down. You know, because that will be the third. That will be the third test at that area. It's rare that they hold on the third test. That's what's so crazy about the ES with the triple top. You don't see those a ton. So it's interesting for sure. So, other areas maybe for tonight, if you wanted to get super aggressive, which this is not something that I will do, I promise you that. You could look at the 29.25. You could look at that area. You know, if you see something good there, you see it breaking with, you know, some volume coming in, maybe around like 9 o'clock, you know, when the Asian markets start to open, might not be a bad thing. Not for me, but maybe for you. Could be something that you'd want to do. Did you have any other levels that you were interested in on GC?
So on GC, I have a couple levels that I'm looking, not necessarily to trade, but it'll show me, I guess, that I'm on to something. So right now we're at a level that I would be interested in, hoping that it stay above, especially looking for longs, 29.31 area. I'm looking for it to hopefully hold this area and continue to push up. And that will be something that I will continue to watch, and hoping that it gets to the 29.35. Right. Yeah. Yep. So I wouldn't necessarily trade it, but it would be a good sign to show, like, okay, we should be going.
We're moving up.
Yeah. Yeah. To hopefully test that.
I mean, look, we got 1, 2, 3, 4 tests of that area, and this is the 5th right now. So
yeah.
And there's definitely interest there. Yep.
That's why I say I wouldn't trade it, but it is showing that it's trying to push up and hold up. So it's making higher highs and higher lows. So I know they're very small, but it's trying.
Yep,
so,
absolutely.
So that's kind of something that I would be watching to make sure that if it holds above there, that we got a good sign to.
Absolutely. If you did take something like that, you could actually use this low here for a stop, because if we break this cleanly and then we come back below here, that pretty much negates the whole thing. So
right,
something to keep in
mind. And that's kind of, if I did take that, that's how I would do it. Those when I have tight stops, but also, to be honest with you, those are typically my biggest trades, because now I'm looking for that, right? And the writing will be on the wall if it fails. It's low risk, but look at the levels above and how big they are, you know, that we could possibly break the next one. And then, you know, if we break that 42 area, oh man, you know.
Absolutely. I mean, you're looking at a 5x trade there easily.
Yeah. Right.
So
what we talking about there? That's probably 4-1, 5-1.
Easily. Yep.
Yeah.
Yep. And I mean, if we break this 41, I mean, odds are really good. We're in a huge bull market in gold, so the odds are pretty good that we're going to start to head back up towards that all-time high. So there's a lot of upside there. You know, you got that tighter stop, so you can take a little bit larger position size because of that, which is another reason, you know, that you can probably have those big trades on it. So yeah, those are definitely some good levels, good input there for sure. Not something I'm going to do tonight, but you know, if somebody's feeling aggressive and has time to trade tonight, that's probably the spot to go, I think.
I may check in and watch, but tonight I probably won't do anything. I mean, unless it's really charging up, pushing up, you know, heavy. But hopefully it doesn't.
Yeah, same. There's not there's not really anything where like. Yeah, I don't think there's anything I'll do tonight as well. I'm just going to see how it shakes out and what we come in with tomorrow, and then I'll use those overnight levels as my kind of guiding posts for what tomorrow's going to bring. So, I think we're good, man. Anything else we want to discuss today?
I think that's it. Everyone that keeps, you know, sending us questions that they want us to answer.
Keep them coming. Yeah. They're great ideas. Like all these little PowerPoint things are all from questions that people have asked us. So, you know, if you have specific things that you want to learn about, that you've been wondering about, now's a great time to ask. So just let us know. I'll break it down, whatever I can. And Adrian will as well. So.
Yeah, be awesome. So yeah, keep the questions coming. Make sure to, like, subscribe, and share it to your friends, people that that's trying to get into the stock market. And we'll keep the videos coming.
Yep.
If y'all want us to do anything, let us know.
Yep.
All right.
All right, man. We'll get back at it tomorrow. Good luck tomorrow.
There you go. Hopefully. Clock them ticks, clock them points, however you want to call it.
That's it. Bank the cash.
Right.
Your gold's breaking right now.